Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, May the 30th, 2013, and today we're going to be looking at what a bear market looks like, and the start of one at least. And I'm going to show you that on the Australia market. I'm going to use other charts as well throughout this video so that you guys can see that this is not something that's only happening in Australia. It's happening globally, but Australia seems to be leading the way here. So I wanted to point this out to you guys in case you've missed in the previous videos. In the past you had, and this again is a 3-month daily candlestick chart, you can see that you had this bull market going on for a while. It was fine, and then all of a sudden you take out a low. Once you've done that, the trend starts to change, and you start to get concerned, because the only way for that to happen, for price to fall lower than it did before, is that buyers are backing away and sellers are increasing, and that would of course cause a change in trend. Then you come down here and typically you find support and a great buy entry opportunity off of your 50-period moving average, but instead you don't get that. You get a shooting star basically telling you to sell here. And why would you sell at the 50-period moving average? You'll learn that in a moment. Then you get another one here, and you're closing below the 50-period again and again and again. A very bearish sign. We move down here again. Then we bounce off this low point here, and I warned you, there's no hammer candlestick formation here. This is not a real support. When we come up here, we get the shooting star again. We bounce off of the 50-period moving average, finding resistance there, not support. We again sell off down here, and we get another sell signal here at the bottom. I told you guys before, when that happens, this is telling you when this is tested in the future is going to be broken. Then we get this rally up here, and I warned you when that happened that this, even though it took out the previous high, was not a change in trend. It was not a bull market scenario or any of that. It's the same thing that we saw in 2007. So let me show you real quick that chart. Okay, this is a picture of the NASDAQ, and this is of course not the same chart, but it has the same pattern, so I keep it on record so I can show you guys what it looks like whenever they come up. And again, this was the time period just before the great crash of 2008, and that's something that's setting up again right here. You can see that we had the bull trend here was finding support at that 50-period moving average, bouncing off of that, not closing below it. Everything's copacetic. Then you come up here, you pull back. We should find a bounce here, but you don't. You take out a previous low. Big fat red warning flag there saying something's just happened, it's not good. You come down here, you start closing below the 50-period moving average, you bounce up to it, find resistance at it, you bounce away from it, you get all kinds of sell signals here at that same point, and then you come up here and out of nowhere, boom, big nice move to the upside, taking out a previous high. Lots of people believing that there's some kind of a rally going on. We just had a great buying opportunity, and then what happens? We start to do the exact same thing. We start taking out previous lows, bounce to a new high, and keep coming lower. This is just a new thing that's developing here. Finding resistance, same again. 50-period moving average, find resistance. Again, pulling back down here, then bounce up to it again. Same thing. All we're seeing is the 50-period moving average getting tighter and tighter before it crosses the 200-period moving average, and you start moving much lower, much faster. This is just a bear market setup that's quite common, and you're seeing this globally right now again. So the double dip argument is not an argument in my mind. It's happening again right in front of you, when just most people just don't know it. Back now on the AORD chart, you can see whenever you have come up here to this point, you start to stall out. You get the shooting star, you rally, and then you come back down. You're basically going nowhere, just kind of a sideways rolling over pattern. We talked about this one was going on, and you're seeing the same thing happen globally. And then you start to break down. Once the breakdown happens, it's important you take note of a couple of things. Number one, are you closing below the 50-period moving average? Yes, you are. That's important. Again, it tells you the same thing this was telling you over here. And you come down here, and you get this little signal like you would bounce here. We got stopped out at this point, and you bounce for 2 days, and then immediately you started going lower. You've already taken out this low, which I told you was going to happen before anyway, but now it's happening, and you're breaking down to the downside. There's a couple things you can learn about this. Number one, if this was a bull market, you would not have had 2 consecutive days to the upside. You would have taken this as a buy opportunity, found support off of this point here. You didn't do that. You're starting to break down here. Again, bear market. Look at the 50-period moving average rolling over. That's all it's doing. It takes a little time for it to happen, but that's what's going on. So all your markets are rolling over here. If you've got money on the long side in these markets, you better move it or you won't have it. Quick glance here at French CAC 40 index, same basic overall story, nice little uptrend, everybody's happy, everything's copacetic, and then we start to have a problem. We start taking out low points, closing below the 50 period moving average, and then we got lower low, lower low, lower low, big bounce up here, nice support by the government, thank you very much for that. And then what we do, we just start to roll over. This is nothing new. You're seeing the exact same thing develop right in front of your eyes. The next step will be coming down here, closing below this 50 period moving average, and then you'll start to test this low point here, and you will of course take it out. Quick glance here at the German DAX composite. Does this chart look odd to you? This should look pretty familiar. Nice little move here going on the uptrend. Note again, finding support at the 50 period when you're in an uptrend. That's what you're supposed to do. When you start closing below it, there's a problem. You're starting to break down. You're to find great sell opportunities at that point. Taking out again low point, lower low, everything's fine. Then big move here. I told you that's not a real move here. You're just rolling over, and that's exactly what's happening. Come here, we come down here, we do this number, we do this number. For the past 2 weeks, we've done nothing but go sideways. That's all we're doing here. And if you actually want to get a closer picture of it, kind of roll down there, and you'll see. We just take the little tools right here, right there. That right there was the signal, okay, that you're rolling over, and it'll become more obvious in the price activity in a little bit, but it's what's happening right here. Looking now at the India Bombay Stock Exchange with a BSE, same basic overall story. Nice move up here. Find resistance at the 50. Take out the low. We come up here. We ricochet off again, new low, and then boom, big move higher. Sell signal, and all we're doing here is just rolling over. This is nothing new. Your next move to close below the 50, and then take out the low point here. Looking now at the FTSE, London Financial Times Index, same basic overall story. Uptrend was nice while it lasted, and you come down here and find what typically should be a buy opportunity off the 50 period moving average. Bounce up here, fail to take out the previous high, and close below the 50. Something just changed, and you start to find resistance at the 50. And again, note, no hammer candlestick, no hammer candlestick. This level will be tested and broken again. Then we have this massive, big surprise move to the upside, and I keep warning you, this is not real. You're just going to roll over, come down here, close below the 50, and then take out this level. So 62.50, yeah, that's next. Quick little chart here in the U.S. looking at the NASDAQ today. You can see you had the same basic overall scenario. You were in an uptrend, finding support at the 50 period moving average, and a nice move up here. Come down, take out, then we come up here again. Oh, we took out a low. That's weird. You're not supposed to be doing that in a bullish uptrend. Come up here and make a higher high, and then we come down here and close below the 50 again. Then another high, and what are you going to do? You're going to come down here and close below the 50 again and test this low. No hammer candlestick formation there, and then again, this whenever you had a scenario, you know it's going to be tested anyway. So you're going to test it and break through it, and you will be in a bear market. So this is globally, you're going into a bear market. Either get ready for it or lose your money. To me, that's fine. For those of you who don't know I didn't go over all the charts, and there's many of them I can go over on today on that particular analysis. But if you want to see the charts, the short term or long term, you can go here to the market chart section on the website. They're updated every single night with my annotations as well as my stop loss limits, so forth and so on. I would, of course, be still selling the Australian market as the chart has been updated. And also, there's a trade alert here on the swing trade section. You can check that out. And that's about it. I'll see you all on Friday. And God bless, take care, and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.